Hims and Hers reported earnings this past week, and although it was a decent quarter in which we saw a price gap higher to only close lower, this bearish price action suggests that when you go to the upper time frames, such as the monthly, there is more downside risk in the stock. Let's get into the numbers before we continue with the analysis, and I can tell you potentially where would be a nice price point to get long. This article is coming from Yahoo Finance. Hims and Hers weight loss business to launch by end of 2023. So Hims and Hers announced earnings Monday and upgraded revenue guidance by 20 million to 830 to 850 million for the year, and provided guidance that it will launch its weight loss management business by the end of the year. The company reported 208 million for the quarter, up 82% year over year, continuing a growth streak enjoyed by few digital health companies post-pandemic. The CEO says the composition of revenue underneath that number is very diverse. You have got mature categories that are continuing to scale and take share. You have got these new ones like the UK operations, mental health growing triple digits, as well as the cardiovascular launch. The company has also boosted its patient access points by partnering with brick and mortar health providers and ensuring telehealth visit complement or provide a front line to in-person visits. That has been one of the key differentiators, Dudum said, and is the reason to believe the company can sustain growth amid decreased investor interest in digital health. Now, before we go to the charts, let's check out this video interviewing the CEO about their earnings and future initiatives.
The health company also lifted its guidance for the full year and predicted adjusted EBITDA profitability within the next 4 quarters. Joining us now to discuss is Hims and Hers founder and CEO Andrew Dudum. Andrew, been a while. Good to see you again here this morning. So good conference call, I would say, for you guys last night. But we're seeing a lot of consumer companies, notably online, warn about slowdowns in their business. What are you seeing?
Yeah, I think we're in this really fortunate position, Brian, and thanks for having me on, that we have an incredible amount of opportunity to grow. And you see that in this last quarter, right? We are growing this business close to 100% year to date, with close to 80% gross margins. These are records for us across the business, across all of the metrics we have, while also organically, given kind of this overperformance, getting to a point where we can really confidently say that we're an accelerated path to adjusted EBITDA profitability. And this is not us pivoting towards profitability, but just frankly, the scale of the business, the underlying efficiency of the model is getting us to a point that at the high end of guidance in Q4, we can actually achieve that profitability metric. And so, we're really fortunate, I think, to be able to be in a position where we are offering something to the consumers that is very close to their core. It's very emotionally resonant. It's things like mental health services, things like sexual health services for their partner in them, products to help them feel good and confident in their skin. And ultimately, these are driving really sticky relationships, which creates, I think, an opportunity for us to scale through these types of times.
Take us into the pricing strategy that would actually allow you to continue to hold on to some of those profitability ambitions in this near term.
Yeah, I think it's important to remember that Hims and Hers was founded in a lot of ways to overcome some of the complexities and pain points that people suffer, and in a lot of ways suffer disproportionately during recessionary times. This is the fact that healthcare is expensive, it's low convenience, it's hard to get access to, it's highly stigmatized. All of these things get worse when the pocketbook is strained, when people are at home, when they're stressed. And so, what we're able to deliver is price points at Hims and Hers for $20 or $30 a month for a range of services across all of our brands and across all of our major conditions. But these are cash pay prices that are cheaper than in most situations than the copay on their insurance plan. And that's an incredible statement, right? We are able to deliver, given the kind of consumer-centric verticalized platform we've built, start to finish healthcare cheaper than insurance. And so during recessionary times, I think we are actually incredibly well positioned to really disproportionately take share and build that brand equity, because we're really delivering on something people need, and the alternative, which is high deductible insurance plans, are really difficult for people, and the majority of our customers and the majority of our this country is plagued with those types of plans.
Andrew, we've been talking a lot about the slowing of hiring, the layoffs that's been going on in tech land, particularly in places like startups. It seems like, I mean, just looking at these results and judging by what you're saying, you're not in that mode. You're not in a belt tightening, pulling back mode. But tell me what's going on there.
No, that's absolutely right. We are really leaning in. And I think it's a testament to the underlying efficiency of this model, right? If you think about it, we have now close to over 800,000 subscriptions that are paying us monthly or quarterly for incredibly deep, emotionally resonant needs. This is a 90% recurring revenue business. So any customer that we've acquired last quarter or the quarter before is going to be paying real dividends in our ability to have productivity in the next couple of quarters and next year. And so when we look at our cohorts, when we look at the retention rates of our business, they're strong, they're very sticky. Our acquisition is growing at all-time highs across the business. And so I think we really find ourselves in a fortunate position of being able to diversely grow across many of our categories, all of which live under this brand of Hims and Hers that we think is really important, something that, again, solves people's deepest concerns. And ultimately, customers are voting with their wallets right now.
All right, so based on the monthly chart, the origin of the strong move up from roughly $4 to $12. Based on the origin of the strong move up, we'll call this the leg up from $4 to roughly $12. We could see price decline all the way down to back to that level to retest the near all-time lows. You could see these wicks here going back to January of last year. There's definitely buyers in this area, but the real buyers are between $3 and $4. So you can see you had a drop in price, 2 basic candles and a rally out. Price returns, picks up any remaining unfilled orders and shoots higher. So with that said, we're going to say that this level is a monthly buyer's level. And we're going to call that 350. All right, so let's scroll down to the weekly chart. You do have this wick here, but on the smaller time frame, let's say that's about $6. Smaller time frame, let's go to the weekly chart. $6 level, yeah, there's not enough volume. See how we have volume here? This is kind of what we want. Volume here. In this case, you had a drop in price, a couple of basic candles, and the rally out on strong volume. This is strong volume to the downside, right? That's definitely on the earnings. All right, so we're going to have to scroll down to the daily chart. Look at current price, go left and down. One thing to note, price is now trading below all the moving averages. So that's very bearish. So I'm looking for just volume spikes. And I don't see any between current price and this monthly buyer's level. Now within that price action on the monthly chart, you can drill down on the daily chart to see where that volume kicked in at. So it was closer to the $3 level. So the question is, how far can price go down? Well, prices can decline another 50%. Prices can get to the 450 level. Best level is going to be at the $3 level. So between $4.50 and $3 is going to be your best level to go long. If and when price comes down, don't buy right away. Wait for some type of bullish reversal pattern before going long. Next earnings, it's not until November. I anticipate price just trickling down over that time frame. I don't anticipate any catalysts to reverse price. I'm actually going to see if there are options to short this stock. Thanks for watching. Subscribe, please. Like the video.